Super excited to have Jordan Freed. We're happy because it's been such an exciting market over the past couple of years. We'll get into NFTs, but Jordan Freed, if you're unaware, is the chairman and CEO of Immutable Holdings and NFT.com, which we'll get into here in a couple minutes, Jordan. But great to see you. It was exactly 1 year ago today, coincidentally, that we had you on the show the first time.
Isn't that crazy? I mean, I was just telling you, I had to be in Toronto for a conference anyway. I just now realized it's the 1 year anniversary of when we last spoke.
Right.
But I was not in your studio. So first, very impressive studio, very impressive operation here at Trader TV. I'm really happy to be here live.
Thank you.
And it's great to be back in Toronto. Toronto's bouncing back, isn't it?
Yeah, it's great to be able to have you in studio. First of all, we went through, obviously 2 years of too many Zoom calls, and we're glad to have you in person. Let's talk about a few things here. I want to touch on the NFT marketplace to begin with, and also the crypto side of things we'll get into. But it's been a tough year, obviously, for investors right across the board. As far as it doesn't matter what what tool you look at, what instrument you look at, equities, digital currencies, NFTs, all on the downside because of the current environment. Give us your take here. If you're an investor in an NFT or in the NFT marketplace, what do you tell people at this point?
Yeah, it's an important question, and it's not just crypto, right? We're experiencing it across the board.
Yeah.
The macro environment is less than ideal. When you look at what's happening in the NFT space, obviously there's a 98% correction in the market right now, 97, 98%. Across the board, both in valuations of these NFTs, but also in volumes. You had some of the top marketplaces in the sector reporting crazy volumes. We saw billion-dollar days and multi-billion-dollar weeks in terms of trading volume for NFTs. A lot of that has dried up. For those listening, this is not the time to be buying NFTs from our perspective. Yeah. And it's strange for me behind NFT.com to even be saying that, but for investors that are looking to get into the space, there's a much more, I would say, picks and shovel opportunity to look at companies that are trying to build in the sector that I'd be looking at. There are certainly deals to be had, but trying to pick winners between the Bored Ape Yacht Club and CryptoPunks and Doodles and things of that nature is incredibly difficult. It's hard to say which of these collections are still going to be around. We're far more excited about the dislocation in valuations from an equity perspective.
Right.
You guys are seeing some of it on your charts, and I think you can be really opportunistic with that.
Let's talk about that in the sense that there's been this correlation between not only the NFT market, but digital currencies as well, right across the board, and equities, more so than ever this year, particular, because of the current market conditions. What do we need to see as far as maybe moves in the space or maybe regulations to come in to not only get that disconnect back in effect, but get people a little more confident on the digital side of things once again?
Listen, this comes back to inflation and a strong dollar. I don't want to be holding any currencies in the world right now, especially I saw the pound was 95 cents for the dollar now. It's absolutely crazy out there to be holding any other currency outside the US dollar, and a strong dollar has hurt equities as well as cryptocurrency. All of us in the crypto space are finally feeling what everybody in the equity space has been talking about for so long. So you're right, that correlation exists. To break that, you've got to look at crypto inflation. So if you look at Bitcoin inflation right now, Bitcoin inflation, Brendan, annually is coming in at about 1.7%, right? Every 4 years, we have a halving event. The next one's scheduled for about spring of 2024. And Ethereum, pre-merge, was 4% inflation annually. Everyone was like, Ethereum as a fixed supply. It's actually somewhat ambiguous what the fixed supply of Ethereum is, but regardless, that had a 4% annual inflation rate. Post-merge, where actually that's about 75 basis points in percentage terms, annualized. So the merge has helped with that. But to break that correlation, what we're actually going to have to see is, I think something happen with the supply. So I do think that correlation will break. I think that you need to, as from an investor's perspective, ask yourself, what do I want to hold today?
Yep.
Do I want to hold pounds today, or do I want to hold Bitcoin? Frankly, I'd rather hold Bitcoin today than GBP, than pound sterling. And I think a lot of other investors are feeling that. At a certain point, the same will be true for the dollar, and I do expect currencies will rally at that point.
Give me your take on Ethereum post this update or merge, if you want to call it that. Where does this put Ethereum back in play as far as the big players are considered?
Sure. You have to be short-term bearish with Ethereum, but long-term bullish. Short-term bearish only because of the age-old wisdom. You sort of buy the rumor, you sell the news, and you don't need me to tell you that. but long-term bullish because a couple good things have come out of this, right? We obviously are seeing energy consumption 1/6 of what it was prior. I do think the new deflationary mechanisms in place, we are seeing inflation, actually live reported inflation on Ethereum drop, almost 4 percentage points, which is really impressive, or 3. And adoption's still there. Why I'm a little bit hesitant is it was really clear how regulators were talking about proof of work Ethereum.
Yeah.
It's less clear how regulators are going to treat a proof of stake Ethereum.
Yeah.
And that makes me a little bit nervous. Gary Gensler is very active, a little bit more so than his predecessor. Jay Clayton was a little bit more pro, sort of let the market do its thing.
Yeah.
So we're watching cautiously, but you got to be short-term bearish. I do think that ETH does stay tied to Bitcoin. I do think that it'll rally around the next Bitcoin halving.
Speaking of the SEC, is there a day where we see them finally step in and put something in place that will govern this market?
One of the reasons I love being up here in Toronto is the OSC, right? We all talk about the SEC, and probably a lot of your listeners here are, sort of fall in both jurisdictions. But the Ontario Securities Commission is far more progressive in their understanding of how these cryptocurrencies operate. And for companies like us, it's strange for me to be an American. I reside in Puerto Rico. For me to be up here in Toronto as often as I am, I'm here almost once a month, and to be publicly traded here in Toronto. And I think that a lot of that sort of stems from your question. The fact that we're all sort of waiting for them to sort of figure it out.
Yeah.
Meanwhile, you've got Mike Novogratz and others that are taking their companies public in this market. It says a lot about what Canada has done to welcome businesses like Immutable Holdings. I'm not as patient to just sort of sit and wait. We wanted to come to a country where we could operate our business sort of under the regulatory approval and a cover of the OSC.
We're glad to have you. Let's, for those maybe unfamiliar, let's talk a little bit about Immutable Holdings, because it was, as we said, it was a year ago today, which is still kind of mind-blowing, that we were talking. We were not in studio, which was disappointing, but on Zoom.
Sure.
And it was because you were going public on the NEO Exchange. So if you want to check it out, guys, HOLD on the NEO Exchange. For those unfamiliar, give them an overview of Immutable Holdings.
Yeah, Brendan, it's really simple. Our vision is to build businesses that increase awareness, access, and adoption of blockchain as a technology, but then these digital assets native to blockchains, like NFTs.
Yeah.
We operate NFT.com. It's one of our subsidiaries, and among that, we also have an asset management practice as well as a media arm. Our philosophy is really, if we can educate and build that relationship with an audience, we can guide them on their user journey and onboard the next couple 100 million people or the next billion people into the world of blockchain. If you actually look at the numbers today and why and what gets me so excited to wake up every day, you've got 300 million, maybe 350 million if we're being a little bit more generous, total users of public blockchain networks today. That number has got to get into the billions, and at the current growth rate, we should be over 1 billion users of public blockchains by 2024, 2025 timeframe. And to then have those people not just hold cryptos like Bitcoin and ETH, but then do things like engage in this NFT ecosystem, that gets us really excited to be building businesses for them. So we've had a tremendous quarter. Our Q2 results are public, and I don't want to just sort of be promotional for the company, but it's it's hard enough to build a business.
Yeah.
It's much harder to do so in a market downturn like the one we're experiencing right now. I believe we're one of the only companies in Canada, at least in our sector, that showed a net income in Q2, and that was certainly due to our NFT.com private beta, and we're really excited about that.
Let's talk about that a little bit more. NFT.com in private beta, as you said, set for public launch later in the year.
Yeah, absolutely. So the NFT market's incredibly fragmented. Everyone and their mother is launching an NFT marketplace. Christie's, Sotheby's. I think the folks at GameStop are talking about it. Reddit, right? And this puts a lot of pressure on sort of the existing marketplaces out there. NFTs exist not just on the Ethereum network, as you know, Brendan. NFTs exist on Solana. They exist on Avalanche. They exist on the Hedera Hashgraph network. NFTs are everywhere. And again, they're cross-marketplace. So the challenge is really, how do we bring that all together? How do we have one place where we can view all NFTs, regardless of the marketplace, regardless of the layer 1 protocol, because we believe that space is going to be commoditized, and aggregate all of it. With NFT.com, we start with the fundamental principle of everyone is an NFT. You're non-fungible. There's only one Brendan. You should own NFT.com/Brendan, and you should own it as an NFT, and that should be your access to a beautiful ecosystem of aggregated NFTs, where at NFT.com, you can view all the NFTs in existence. So Private beta has been really successful. We have over 10,000 profiles created on NFT.com. We did a token-gated beta where you actually needed an NFT called an NFT.com Genesis key to access it, and thousands of people were able to get these and join us, and it's going really well. Once the platform's hardened, we've done 10 feature releases to this ecosystem. We'll be fully public and public beta before the end of the year is the goal.
Speaking of the end of the year, we have 3 months left. It's kind of crazy to think about it, but
it's wild.
Going into the last quarter of the year here, if you're someone who's sitting on the sidelines, maybe looking to get involved, whether it be digital currency, whether it be NFTs, as an investor, what's your best advice at this point? What has you excited for the remainder of the year?
Sure. So I think there's a couple opportunities, and then I'll kind of give just sort of my personal take on the market. To be opportunistic, I'd look at two different areas. One is open source code, and one is, I think the dislocation. Specifically, when I'm referring to open source code, it's you look at like what's happened in the market with Celsius and Voyager, and then you zoom in on some of these things like let's take UST, the stable coin, the catastrophic stable coin that lost $40 billion plus in market value in a matter of just a few days, and all within a month's period. There's a lot of people who are quick to say this is the death of collateralized stablecoins. And I think it's the wrong way to look at it. Stablecoins collateralized by a forever inflationary layer 1 protocol token is probably a bad idea. And I think we've learned that from Do Kwon, and I wish him the best, but I think he's on the run right now, and there's still a warrant out for his arrest. But the underlying technology behind it may make more sense if you had that stablecoin collateralized by, let's say, Toronto real estate, which is a great market. And will experience corrections, but certainly less so than a volatile crypto asset. Or maybe gold. Maybe that'll take us to 100 years ago when we used to have currencies with more fiscally responsible regulators that were actually still backed by things like gold, hard commodities, and hard assets. So what excites me is taking the technology behind UST and applying it to something that may make a little bit more sense, and that maybe shouldn't have had a 27 or 28-year-old behind it, applying it to sort of a forever inflationary currency, but again, real estate gold. The next bit is just this dislocation. You can't not get excited. You go back 20 years ago and you saw things like eBay trading at a 50% discount to their cash on hand.
Right.
They were already profitable, and they weren't even being valued at a function of their future discounted cash flows. They were being valued at 50% of their cash on hand. Similar dislocations exist in the market right now. Guys like Sam Bankman-Fried with FTX are out there shopping, being opportunistic. The smartest people in the space are raising money right now, and they're doing M&A. We're among it. We raised money before the market correction. I felt that the market correction was coming, and we wanted to put cash in our balance sheet to be opportunistic. When I look at the market, finally, from my personal take, I think in crypto they'd call me OG. So one of the old guys who's been in the space for a while, and I'm young in every other sector, right? You tell by looking at my face. But in the crypto world, I've lived Bitcoin 1,000 to 200. I've lived Bitcoin 20,000 to 3,000, and just most recently, of course, 60, 70,000 now to where we are today, and we don't even know if the floor is in yet. Every cycle, people are quick to come in, right? They're quick to come in and send you their condolences, to tell you I told you so, and check on you, and they don't really mean it. So from a personal take, what gets me excited, frankly, Brendan, is proving people wrong. This sector is not going anywhere. This sector is here to stay. Bitcoin, the network, has not gone down in over 12 years. It's not going down in the next 12 years. The only way to turn it off is to turn off the internet itself. What gets me excited is taking that tech, applying it to things that matter. And I think, now in this quiet period where there's less of that exuberance in the market, there's a lot of real people building. So what I would encourage your listeners, the people out there viewing right now, to look for the guys with the chips, guys and girls with the chips on their shoulders that are actually building real businesses in the sector, that have done it in a bootstrap way. And this whole exodus, you see all these executives leaving FTX and leaving Coinbase and leaving elsewhere. They're not cut out for a bear market. Bear markets are hard. Building a business is hard. But what gets me excited is building a real business during this downturn.
Jordan Fried is chairman and CEO of Immutable Holdings. Guys, check them out, HOLD on the NEO Exchange. Great to have you.
Thanks for having me.
Thanks for coming by. Guys.